Hey guys, welcome back to Farshcrypto. I'm coming to you from a different location today. I'm in Bali on holidays, touching grass while Bitcoin has been absolutely doing nothing, going sideways, boring, just ranging from that $65,000 to $60,000 level. One of the good times now is to just get off your screens and go and have a bit of fun, enjoy the money you've made hopefully the past year since Bitcoin went from $15,000 to $70,000. A lot of people are getting bearish. I know the fear grid index was looking at that. Fears kind of getting to that 49-50 range, and that's a good thing in my opinion. A lot of people are calling for further downside, and when I see that in the market, that's what actually gives me more conviction that I think we are going to see max pain, in the sense of all the bears are going to absolutely get demolished. The summer in Bitcoin after the halving has always been a bit more quiet, sideways, with a bit of downside, and that's normal. Especially a lot of the miners readjust after the halving as the production cost for each Bitcoin increases, and some miners can't afford to continue operating if they can't get cheap enough energy, and that's when they might have to sell their Bitcoin and readjust, and that's why you see a little bit of adjustment here. I think the production cost for each Bitcoin should be about $60,000 levels now, and that really gives me confidence because we are ranging at these levels. If fundamentally $60,000 is going to be the minimum production cost for each Bitcoin, roughly, in terms of technical analysis, we're also building this huge support line around $60,000. Think about how much time we spent the past year in the bear market under $60,000, and think about how much time now we're spending above it, from that $70,000 to $60,000. That's a good thing. We're really trying to flip that resistance into support. That's a very, very positive thing in my opinion. Now, since that's happening and there's not much else to go through, I want to actually have a look at something more fun, and I want to look at the more longer time frame. I want to look at the quarterly, 6-monthly, and yearly chart of Bitcoin, and then I want to compare it to Dixie, which is US dollars. And obviously we know if you kept your money in cash in the past 20, 30, 40 or whatever years, you have lost money because of inflation. But I want to have a look and see what asset has been the best hedge against inflation. Obviously Bitcoin is a lot younger than gold, S&P 500, Nasdaq, and that's fair, but I also want to go ahead and compare it to those assets in the past 11 to 12 or 13 years, or however long, since 2010, and see where you would have actually hedged yourself against inflation the most in these assets. It'll be something fun to do. We'll look at the charts, and then also a good thing to start looking at those higher time frames. If you have higher conviction, it actually builds conviction. Before I go ahead, I probably should answer, you're wondering what these glasses are. These are the infamous Mog Coin Viper glasses, and this is a huge meme. You can see it all over Twitter, and I'm a Mog bull, so I'm invested in that coin, and it's probably my number one meme coin this bull run. This is not financial advice, but I have to rep my meme coin, and here I am with the glasses on. So with that being said, I won't hold you much longer. Let's jump right into the charts. The question that I want to hopefully answer in this video is, what asset would have protected you the most against the ever downside performance of US dollar? Because that's what they've been doing. They've been just printing US dollars and inflating the currency and reducing the value of the money we earn. You could have bought a house back in the day in these times for a few $1,000s. Now you have to spend millions of dollars to buy that same property. So your value of the currency has only gone down over years. We'll start by looking at gold. Obviously, a lot of people believe that gold has been a great asset to protect against inflation over the years. This goes way back. If you just look at the overall performance of gold from 68 or 70s all the way to now, it has done a 6,800%. So gold has been a great hedge against inflation. That is from the 70s. But you also got to go back and think, okay, is gold still a good asset? Has it been a good asset in the past 10 to 15 years? Because that's when Bitcoin has come in, and actually a lot of people who are Bitcoin maxis or believers in Bitcoin, they think that Bitcoin is here to replace gold, or at least is here to outperform gold, since there is the digital gold narrative for Bitcoin. So if we just go in the past 10 years to 14 years, so since 2010, say in 2010 gold was 1,300 USD, and right now it's sitting at 2,400 USD. So it's only done an 80%. Now that is not an amazing return in my opinion. For 14 years of performance, that is not a great result. But in saying that, would you have protected your net worth against the inflation of US dollars? Yes, you would have. But would it have been the best asset? No. Now, I believe that gold is actually in a very nice position now. It's actually breaking out from a multi-year consolidation. You can almost call this a cup and handle. I think gold is about to reprice itself this year. So this is a really very, very good chart to look at. And actually, this is a very good chart for Bitcoin as well. Gold goes up as an asset, so will Bitcoin, I believe, and so will the traditional markets. So this is actually really good for all assets across the board because a lot of them are correlated positively. This is very good. The chart looks great, but just speaking from the past 14 years, gold has not done a crazy amount. Now, if you go before that, from the 2000s, it has done amazingly. Like it went from $260 all the way up to here, 577% over the 10 years. So if you were in there from 2000s to 2012, it was a great chart. Now, could we see a repricing again now and, see another 500%? Maybe, because if you look at that, gold went up, consolidated, multi-year consolidation. Now it went up, repriced, and it's been consolidating for years now, and I think it's breaking out again. So we might actually see a really good repricing in gold. We look at the S&P 500, it's done a 7,000%. So it's actually very on par with gold. Gold was about 6,000%. S&P 500 has done about 7,100%, 7,000%. So whether you put some of your money in gold, some of your money in S&P 500, very similar returns in the past 50 years. And if you have a look at the 2000s, you can see we saw about 577%. It's a great return, about 500. I think gold was the same, that we just had a look at that. When we looked at the 2002 to now, 700%. So actually gold's outperformed S&P 500 in the past 24 years or so. But again, now that we're going to have a look at comparing it to Bitcoin since 2011, roughly, S&P 500 has done a 300%. Great return. But looking at gold, this is when gold has been consolidating all this time since 2012 or 2011. So we've only done a 60% in gold. So since 2011, your money would have been safer in S&P 500 than gold. In the past 24 years, your money would have been the same whether in S&P 500 or gold. But over a shorter period of time, from 2010 or 2011 to now, your money would have been actually better in S&P 500 because gold's been consolidating pretty much this whole time. And we've only seen a 60% rise till now. Let's look at Bitcoin. This is where the fun begins. Bitcoin started in 2011, and obviously we don't have a huge history. It's a newer asset. It wasn't here since 1970s or whatnot. Where we are at now, I might even just start at the high of 2012, just to be more fair. Because the first year was just a new asset. It's probably not fair, just volatile. It's not really being traded or anything like that. But just looking at it from a 2012 or even say 2013 bull run that we went up, from there till now, we are at a 67,000% on Bitcoin. This would have been, no questions asked, the past 14 years, the best asset to put your money in. Now, because it was new, no one was buying this at that time. People were buying small amounts of it and buying pizzas with it, obviously. And once it started to get traded and become more legitimate, if you bought Bitcoin then, it would have outperformed any other asset and it would have been your best hedge against inflation. So anyone who says, oh, what about Bitcoin? Look, it's a risk. Obviously, these are all risk. That's why they're called risk assets. Now that Bitcoin has proved itself, and there is the futures and spot ETFs, it's becoming more and more legitimate. So when I discuss this to people and they're like, oh, but I don't know about Bitcoin, and that's the risk. So if you need to wait until it's fully legitimate, by that point, yes, your risk has reduced, but so has your reward, because you're waiting for the green light from the government. And that's fair enough. If that's your risk tolerance, that's what it is. But if you are in it for the higher reward, then you have to increase your risk. And that risk is, well, you're getting into an asset that is not as legitimate as gold or a lot of these other features. It's not as regulated. So that's why now that it's more regulated, Bitcoin's at $70,000. Before it was regulated, we were sitting at, 15,000s, 20,000s, 30,000s. So the more legitimate it becomes, and this is where I want to have a look at the yearly chart, you can see the upside and your reward is reducing. So you are seeing what they call depreciating returns from each bull run, your upside here was 5,600%. Here it's 1,300%. Here it's 1,600%. So it's reducing. Your reward is reducing as it's becoming more stable. The volatility will drop over time. And what can we deduct from looking at this from a yearly perspective? This is a bullish chart. I mean, from a yearly perspective, this was our bear market in 2022. And don't get me wrong, it was a very harsh bear market once you're in it. But once you zoom out, this is by no means on a yearly scale a bearish chart. We went up from here to here 1,900%, and very normally we had a pullback of 60% for a volatile asset, that is. And from there, so far we're up about 260%. Do I think we're going to do another 1,900%? No. But do I think we're going to do half of that? If we go to a 600 to 700%, that's that 115k to 120k. Where we'll go, I don't know. But with any of these assets, besides the dollar, if you have been a bear over a long period of time, you have been screwed, because all of these assets have been up only over the long period of time. If you look at them at a yearly scale, could we see a multi-year consolidation? At this point, looking at the yearly chart of Bitcoin, you can't be bearish at this. Basically, we're at a year that we just made new all-time highs. We're well above the previous closure, and would love us to close the end of the year above this, and I think we will. That's what my honest opinion. And if we close on all-time highs, that's price discovery, and you don't want to go against that. You don't want to go against an asset that's in price discovery, because it can go so much higher. We look at a fib tool and go, say, from, actually I'll do a trend fib. We'll go from this low to this high to this low. The 168 is at $120,000, and that sits within that 500 to 700% mark that I was referring to. You look at the bottom of this to here, that's 640%. That's very, very achievable, and that's, I think, where we'll see the top of this bull run. So hopefully you enjoyed this video from a different location and just something fun to do. I think people don't really look at this kind of time frames. Usually we all get so bogged down in the 15-minute chart when we're trading, but it's just, while we're going sideways in Bitcoin, I think it's something fun to do. Look at the more longer term time horizons and see where we're headed. Is Bitcoin still a good asset? I believe yes. Fundamentally, I think it makes sense. Again, it's a new asset. It's a very young in its existence, so only time will tell. But right now, sitting at all-time highs, being in a bull run, continuing its trend, I think it's very, very unwise to go against that. It's always best to let the trend be your friend. So that's it. Thanks for sticking around till the end of this video. I really appreciate it. If you enjoyed it, please consider subscribing to this channel, as I'm trying to create a community that we can all learn from each other. While I'm away, I'll make sure to continue to make more videos. With that being said, I'll see you in the next video.